Thank you, ladies and gentlemen. We are ready to start our next panel. Financial innovation in the past decade, as we know, has dramatically reshaped monetary systems across the globe, but it's also brought challenges to policymakers. So in this rapidly changing landscape, central banks play a critical role in promoting innovation while safeguarding financial stability. What are the merits and downsides of these technological advancements, the challenges involved in their development, and the associated risks and central banks' role in managing them, as well as key considerations involved for crafting an appropriate regulatory framework? Well, our panel here is about to discuss all that. Please give a warm welcome to our moderator, Mr. Eddie Yue, Chief Executive of the Hong Kong Monetary Authority. And our panelists, Mr. Ravi Menon, Managing Director, Monetary Authority of Singapore. M. Rajeshwar Rao, Deputy Governor, Reserve Bank of India. And Mr. Eric Tedien, Governor Sveriges Riksbank. Thank you, gentlemen.
Thank you, Karen. Welcome to this second panel about the future of the monetary system. And today we are very privileged to have three very good central bank experts about digital money. Ravi is a household name in Asia. You all know him. And Rajeshwar is from India with very good innovation in CBDCs. And Eric, of course, in Sweden, we are seeing the first CBDC pilot back 5-6 years ago. And we are seeing a lot of financial innovations that might actually shape the future money and finance and payments in a different way. Different disruptions. I think the two most important ones probably are blockchain innovation and AI. But let's put AI aside. Otherwise, just generative AI, we'll spend the whole hour talking about it. But blockchain innovation is already a very fertile area. If you look at the past few years, the blockchain has brought about the rise of the digital asset ecosystem, the stable coins, CBDCs, where many central banks are piloting, including many of us here. The HKMA is doing both wholesale and retail pilots. And also increasingly, more people are talking about asset tokenization and deposit tokenization. So I would like to really ask each panelist on how all these changes will be shaping the monetary system in the next 3-5 years. Let me start with Ravi. In the MAS, under Ravi's leadership, you've been really spearheading on innovation in the past few years. And you've been having a very vibrant digital asset ecosystem. You're about to have a legislation on stable coins. And you've been partnering with different banks on tokenized assets and tokenized deposits. And with all these different new elements in finance, how do you, can you really just set the scene for us? How do you see all these integrating together in future? And how do all these new elements interact with traditional finance? Why don't you set the scene for us to give us an overview of where you see things are going with the trends that we are already seeing now?
Okay, well, thank you, Eddie. And thanks to, of course, to Eddie and to the staff and management of the HKMA for the wonderful arrangements. Great to be back here in Hong Kong after some time now, and to see the vibrancy and vitality of this city, which really symbolizes Asia as a whole. And I think the topic for today is well chosen. And as you correctly point out, I think the two big technological waves that are transforming financial services, one is digital assets and tokenization, and two is artificial intelligence. Maybe next year's conference we'll talk about AI. Tokenization and digital assets. Now, it's a very complex landscape, and I thought maybe if we just step back to see what is it that is at the heart of this movement. I would say it is the idea of tokenization. Even before we talk about CBDCs and everything else, is the idea of tokenization, which is in some ways akin to securitization about 50 years ago. And the central idea in tokenization is that you can take any asset, a real asset or a financial asset, express it as a token, as a digital token that you can put on a ledger, a distributed ledger. And what is unique about tokenization is that the ownership rights over that asset are embedded in that token, right? The token carries the ownership rights with it. And tokenization enables two things to happen. One is that it allows for direct exchange, or what those practitioners would call atomic settlement or real-time settlement. It allows for the direct exchange of two assets because they are both in token form, and you can put both on the same system, which is not the case today, right? You buy a security, you send cash or money. It's on two separate systems, two reconciliations, and if it's cross-border, it's multiple reconciliations. When you tokenize something, it is on a common, and place it on a common ledger, you can move assets seamlessly. So that's one big benefit. The second, it allows fractionalization. Here it's a bit akin to securitization. You can take almost any asset and fractionalize it into tokens. And this means two things. One, a much larger body of investors can have access to that asset. And two, the asset owner himself is now able to monetize it because he's able to fractionalize it and make it liquid and investable. So these are amazing properties, right? Now, how do you harness their benefits? And that's why I think the big wave, as you say, is the tokenization of financial assets and financial transactions riding on these two technologies, tokenization on a blockchain or distributed ledger. So if we want to tokenize assets and move them across these ledgers for seamless execution, then you need a medium of exchange. And this brings us to the topic at hand, which is the monetary system. And here I would posit that in its essence, the future monetary system is not going to look very different from the current one. As the BIS puts it, it will be still a two-tier monetary system. Today, the money system we have, or money, composes of two things: a central bank liability, which is notes and coins, and a commercial bank liability, which is the bank deposits we hold. For most of us, I think 95% of our money is in bank deposits, and maybe about 5% in loose cash in our pockets. That basic two-tier system is unlikely to change. But what is likely to change is that they will get tokenized, or at least part of that monetary system gets tokenized, so that that tokenized money performs a medium of exchange function in a tokenized financial system to move tokenized assets. So I think there are 4 contenders for tokenized money. One, central bank digital currencies, CBDCs, which is the tokenized form of notes and coins, as well as central bank reserves with the commercial banks. If you think of your monetary base, it's got 2 parts, notes and coins, and central bank reserves with the commercial banks. That's the foundation of the monetary system. So in a tokenized future, you will have CBDCs held as wholesale CBDCs with the banks, and perhaps retail CBDCs issued to the general public, which India and China have already done. So that is one form of tokenized money. The second, I think, would be tokenized bank liabilities, since more than 95% of our money is basically bank deposits. And when we make digital payments, we are moving bank deposits from one account to another account. In a tokenized economy, you will tokenize part of your deposits so that you can actually put it on the ledger, on chain, and finance and lubricate the movement of assets in the blockchain or distributed ledger. So I think that is a very viable candidate, and already there are many pilots being done, and we can get into some of those pilots, and many banks around here have already done this. It's gone beyond pilot, it's in production stage, but it's not scaled yet, and we could come back to that later. The third contender, and I know this is not universally accepted, are well-regulated stablecoins that keep stability of value. I know stablecoins have gotten a bad name in the last few years. Most of them are infamous for not being stable. And one wishes we could control the use of the word stablecoin. But I think if you can have stability of value, these stable coins, which are issued by non-bank players, can be a very useful complementary form of digital money in the system that I just described. CBDCs, tokenized bank liabilities, and well-regulated stable coins. Bank deposits are fractionally reserved. And as Cho Sia-Chuan mentioned yesterday, we trust bank deposits as money because of regulation, capital requirements, liquidity buffers, lender of last resort by the central bank. So we trust our bank deposits as money. Now, stable coins don't enjoy those because they're non-bank issued. But instead, what I think regulators are doing is to move towards full backing. Basically, it's narrow money. It's narrow money. The stable coin that's issued is fully backed by high-quality government securities or cash. So it's fully backed. The beauty is that it's in token form, and it can be used for a variety of innovative applications. And we can leverage off the innovations in the non-bank sector for the benefits of stablecoins. The last contender is private cryptocurrencies, bitcoins and the like, which I think have miserably failed the test of money because they can't keep value. Most of their traction is as a means for speculation. Nobody keeps their life savings in these things. People buy and sell these things to make a quick buck. I don't think it meets the test of money. So private cryptocurrencies, which are native digital tokens, unfortunately don't meet that test. So I think that they will eventually leave the scene, leaving these three components, CBDCs, tokenized bank liabilities, and well-regulated stable coins as the three prongs of a future monetary system. I'll stop here, thanks.
Thank you, Ravi. I totally agree that tokenization will be a trend that we will see in the next 3-5 years. And we will come back to tokenized assets later. But let's focus on tokenization of central bank money, which is central bank digital currency. Let me go to Eric first. I know that Riksbank already started a e-krona project back in 2017, and you've been continuing the pilots through the last few years. What's your latest findings on your e-krona project? What's the next step? And also, I understand that Sweden has already gone very digital in terms of your payments. And I just want to ask you one question that's bothering all of us in thinking about retail CBDC, is there really a use case that e-krona, for example, can outcompete the current digital payments, something that they cannot do, that we need to think about a retail CBDC or e-krona in your case? Eric?
So thank you very much, Eddie. And let's start with an anecdote. I think this was probably 3 or 4 years ago. I took the cab to the airport and flying down to Frankfurt, and the cab, of course, said a credit card only. So that's I'm used to. And then I landed in Frankfurt, and they say cash only in the taxi in Frankfurt. And I'm saying that because sitting here in Hong Kong, in Asia, it seems like the Swedish experience is very close to many countries here in Asia, extremely digitalized. Many countries, including, I think, China, don't use cash as much. But if you go to Europe, cash is still the predominant means of payment in the larger economies in continental Europe. So here, for sure, the Nordic countries stands out. So I never use cash. My kids don't know how a cash note looks like, which actually is a pity because eventually I will have my signature on one of them. But I guess I need to have it on a wallpaper or something to just show that actually my sign. No, seriously, the CBDC project for sure started in Sweden many years ago, and I think what we have done so far is experimented the technical kind of issues. And I think and I'm pretty new to this job, when I talk to the people that have been working with this, say that The technical aspects seem to be manageable. So basically, it is possible in our test environment anyway to integrate the CBDC into the bank system. It's also possible to integrate the CBDC into the terminals of sales in the retail part of it. So there, I think there's for sure a kind of a possible way forward. What we also try to explore, which I think is important both for integrity reasons but also for resilience, is the offline. And there we find more difficult. It's actually difficult to find totally with full integrity, so to say. Eventually it will be possible one way or the other to track down who did what payment. And of course, for many people, I guess including myself, that is a drawback with digital payment, that you don't have that integrity. So about this million-dollar question, no, I think this is a paradox that we are so digitalized, so it will be a hard sell to introduce something new, and the selling point is the fact that you have central bank money rather than private money. Well, that might be extremely interesting in a conference like this, but for the general public that make payments, they don't care. As long as they trust private money, of course, that's the key here. We also have, since 4 or 5 years, it's more or less exploded the mobile pay. So that's now overtaking credit cards. So basically, we swish. And it's called swish because they have this sound when you do it on the phone, and swish. So that's why it's called swish. So that's a saying in my country that you switch each other. Typically, you switch your kids because they know exactly how this works. So they can get money through swish. But this has gone from small payments person to person to actually even larger payments in the capital goods market, and even some business to business. So really an explosive development. But coming back to the possibility to have CBDC, it took like 30, 40 years to have cards being accepted and basically turning that tipping point to be a means of payment for everyone. For the Swish or for the mobile pay, it took some 10, 12 years. Even though I think it was a really good selling case, really good features. So I guess we are kind of skeptical that CBDC actually will have a big turnout, but I think still there are some advantages. So let me say a few words on why we're still exploring this. Of course, one is the anchoring of private money. So you could say that you have cash as the anchor today, but of course that's more or less an illusion because you can't take all deposit out of cash. That would be physically impossible. But just the mere fact that there is some mirror kind of money that is central bank money, i.e. cash. I think that anchoring, I sometimes call that as a philosophical question. Either you believe it or not believe it, but I think it's hard to reject. There is something in that. There is actually some kind of link to central bank balance sheet. So that's one thing. The other thing I think is the risk with this with the digitalization is that you have a monopolistic kind of system. Basically, this is going to be run on one or two system or maybe banks jointly. To have an alternative, if that doesn't work out, I think it's of course extremely important, generally important, but also important for resilience. And resilience has turned out to be even more important, I guess, globally, but for sure in our countries. We are pretty close to Russia, and we should not talk about geopolitical things, but of course that's an issue that we feel actually that the geopolitical situation is not only something you read about in the newspaper, it's actually a clear and present danger in our part of the world. And that we are stepping out on all aspects of the society, the resilience part of it, and for sure I think to have a resilient payment system is important. And on that, I will have another anecdote. I talked to my Ukraine colleagues, the Central Bank of Ukraine, and asked what happened in Ukraine when the war broke out. You maybe think that they were rushing to get more cash. And I think they did so initially. But eventually, actually, cash usage is going down and internet payment is going up. Because the internet is working fine, and of course, to travel with a lot of cash in a war zone has a lot of complications. So that's just it might not be cash that is the resilient, might be something other, and to build a resilient payment system is important. I will close to say a little bit what's the future kind of strategy for a small open economy neighboring a large currency area, the euro area. So basically, we are saying we should be prepared and go potentially jointly with Euroland, but not go first. Because from stability point of view and also from, as I think, a tactical point of view, it's probably better to follow and to see what happens there and to maybe do something when we see how they progress. But that means that we work closely with ECB. We also have a strong voice, I think, in the international community. So we want to be prepared. So that's basically the strategy. Thank you.
Thank you, Eric. Going back to your anecdotes about the taxi at the airport, unfortunately, the taxis at the airport in Hong Kong, generally, they don't take credit cards. They take cash. We've been trying very hard to push them to use digital payments. We will try harder after hearing your anecdote. Let me go to Rajeshwar. India is actually very, very quick and also quite progressive in introducing CBDC. I understand that you do it both on the wholesale and retail level. For the retail CBDC, I was checking that you've got already over 1 million users, and it's also connected to your instant payment system, which jacks up the usage rate. And wholesale CBDC, you're already using that for government bond transactions. So you seem to be really quite ahead of the rest of us. Can you tell us, what prompts you to push CBDC? What's your experience so far with the introduction of digital currency in India?
Thank you, Eddie. At the first outset, let me congratulate you and the BIS for completing 30 and 25 years. Thank you. It's great and nice to be in this conference. Regarding your question on the same, if you look at it in India, the digital payment index, which reflects the usage of digital means for financial transactions, has increased quite significantly. When we created a digital payment index sometime in 18 with March 18 as the base, today in March 23, the number is around 395. That means there has been a fourfold increase in the last 5 years. So it's grown significantly. We launched the CBDC retail program with a closed user group sometime in December 22. And it's basically a digital representation of the physical currency. It began initially as a pilot with 4 banks and 4 cities. Now it's extended to about 13 banks and about 80 locations. And initially, basically a person-to-person and a person-to-merchant set of transactions. Right now, we have more than 2.75 million participants in the pilot. And the scope of the pilot is being gradually expanded to cover various use cases, designs, and technological considerations, so that we get a full-scale experience before we think of perhaps going further on this. And the experience from our previous implementations suggests that CBDC, like the earlier payment innovations, etc., what we have done, it suggests that CBDC innovation will be more successful if it meets unmet user needs, achieves network effects, and is implemented using the existing accessible technology and infrastructure. So we have observed that the availability of the acceptance infrastructure is a key, and we are actually riding on the unified payment interface for this process also. And in order to improve acceptance, we are making it interoperable with the UPI, which will help us to achieve the universal acceptance. CBDC, in our view, should actually imbibe all physical features of the physical currency, including anonymity. And data privacy in today's area is a concern. And I think Eric mentioned about the cyber security and cyber resilience. I think these are very, very critical issues, which we'll have to ensure so that the CBDC can be trusted as much as a physical currency. And one of the foundational considerations for the design of CBDC is that offline transactions also need to be facilitated, and I think we are working on how that can also be done. We also launched a wholesale digital rupee sometime in November 22, and it is used in the secondary market settlement of government securities. And this provides several benefits such as avoidance of the central counterparty charges and settlement guarantee infrastructure, or the need for collateral to mitigate settlement risk. In the second phase of the pilot, actually, we are also looking at interbank money market transactions, and future users could consider tokenization of securities and settlement based on smart contracts, and unification of the current siloed securities and monetary databases, which I think can give us significant gains, and tokenization would certainly offer this benefit. Then in order to modernize financial infrastructure will be required for this entire purpose. And central bank digital currency seems to be well placed to actually leverage the benefits of the technological innovations and tokenization while reinforcing trust in the monetary system. The coexistence of digital currencies can actually introduce risks that need to be carefully managed. Regulatory bodies and financial institutions should develop risk management strategies to address these issues. And I think the digital money actually offers opportunities to improve on design relative to today's system. They can develop, they can contribute to a well-developed infrastructure for digital transactions. And we have to ensure that the financial infrastructure can enhance the resilience, convenience, and also offer the cost efficiency and transparency. So that can actually help in promoting financial inclusion and growth. I will stop with that at this point.
Thank you, Registrar. We've talked about the tokenization of central bank money, and I'll come back to the tokenization of private money later. But let's go to the asset side. Ravi earlier talked about asset tokenization. With different places, including in Hong Kong, we are piloting tokenized bond for the government, and people are piloting tokenized equities, tokenized funds, or even real-world assets, like Ravi said. I just wonder what our panelists think about asset tokenization. One, where is it going? Is it real? Is it really becoming a trend? Will it really form a substantial part of our future markets? And secondly, what impediments or what obstacles or what difficulties do you see for tokenization to go to the next stage of really getting into the mainstream? Are there difficulties that we are trying to tackle, or is really quite difficult to tackle? Maybe this time I'll start with Eric.
So I will be fairly short because I will listen to Ravi. He's, I think, the expert here in the panel. But maybe some principal thoughts here. So tokenization, I guess, tokenization, blockchain. You think about crypto. It's about decentralizing the financial system. It's even more or less, to some extent, the political movement, right? But for sure, there are merits, and I think Ravi underlined many of them. But the kind of settlement system is by definition today a centralized system. So you will take here a technology that should be or thought to decentralize the financial system and put it into a kind of a centralized, well, that's one thing. The other thing is that, of course, you need to have this coordinated globally, because if you're talking about securities, for example, that's a global traded asset, right? So some kind of coordination need to be done here. Having said that, I think we are in early stages. As I understand it, there's no really it's still in the test phase, so to say. Maybe a little bit more test, but it's not kind of a strong take-up at this stage. So I think central banks and regulators need to watch this, need to understand the kind of stability issues on it, and need to be prepared to act rather than to say that this is good or bad, because of course it's evolving technology. Thanks.
Ravi?
Yeah, thanks, Eddie. Coming back to tokenization of assets, and I want to link it to the earlier discussion on digital central bank money. I think one of the features we are looking for is atomic settlement. And that is so critical, because if you can achieve the direct exchange of two assets in real time, you have eliminated settlement risk, which is a big headache for many of us for decades. You don't have duplicative reconciliation processes, especially cross-border. And you don't have to set aside collateral and funds. Today we do for all cross-border transactions. So I think the elimination of settlement risk is one of the key benefits of using central bank digital currencies. Wholesale CBDCs achieve that. I think the payoffs in the domestic setting are not very large. We're also doing wholesale CBDCs for in a live case next year, where we will settle the balances across the banks for their payments. I don't think the savings are huge, but at least it demonstrates the technology work. I think the cross-border setting, the savings are huge, because cross-border payments is easier. We already have that. India and Singapore have it. We can send money to each other because our instant payment systems are linked. But our banks have not settled yet. And that settlement risk is what adds mostly to the cost. So I think with wholesale CBDCs, you can do that. In Hong Kong here, you have mBridge, which is a multi-CBDC platform, which allows this to be settled on a platform because there's no central party in cross-border setting. And so you have a distributed ledger and multi-currency CBDCs doing that. In Singapore, we're doing the same thing with Dunbar. So I think we need to link the issue of atomic settlement with the use of CBDCs. It could be tokenized bank liabilities, but I think with CBDCs, there's a greater degree of trust, and most of the experiments are in that space. Then the tokenization of assets itself. I think experiments are being done in FX, in fixed income. You have tokenized bonds here in Hong Kong, and in equities. And I'll just mention a couple of them to say that they are beyond pilot. They are in production stage. The challenges are to scale. So FX, we are tokenizing foreign exchange to achieve a 24/7 global liquidity pool. The problem today is that you have very fragmented networks. So you want to free up this liquidity that is fragmented and trapped in different pools of liquidity by having a common ledger that keeps track of the movement of these tokenized FX. So this is something Bank of New York Mellon is doing together with OCBC Bank in Singapore. We're trialing the FX tokenization. And another example, tokenizing bonds. And especially, I think, for cross-border purposes. For domestic issuance, again, the cost savings are not large. But for cross-border issuance, end-to-end from issuance, distribution, and settlement of securities, there are live cases. UBS Bank is doing that with SBI Digital Asset Holdings, together with DBS Bank. And they actually did a pilot repo agreement with natively issued digital bonds, working across Switzerland, Japan, and Singapore. So there are very interesting pieces of work being done in many jurisdictions across. These are live transactions, not laboratory POCs that are doing this. The problem with scaling is that they are still in multiple networks. You don't have a unified ledger. The BIS has spoken about this. Augustine, when he was in Singapore, spoke about this. Should we think of a new financial architecture? If it's going to be tokenized, then can we have a layer of a unified ledger into which these assets can ride on? It's, I think, a very powerful concept, I think worth exploring. Will it work? I don't know. But like all good experiments and innovation, I think it's worth a try because the payoffs are huge. The International Monetary Fund is thinking about the same. And together with a group of about half a dozen banks, the MAS has announced a similar, we call it Global Layer 1 framework. And one of the things that this is supposed to achieve is that you can, through the use of smart contracts, build in regulatory and policy requirements onto the platform. So you have regulatory compliance by design. Today, most regulatory compliance is ex post. You build the system, you transact, and then you check for compliance. But through smart contracts, you can build in policy requirements, you can build in capital control requirements, you can build in AML and other regulatory requirements into the contract itself that governs this chain. So if you can build a global layer like that, that will be the ultimate global public good for the financial system of the future. Is it possible? I think technologically it is possible. I think it's a question of achieving harmony across jurisdictions in terms of the design elements and the governance structures for these things. And I think that's something that is worthwhile pursuing, and many of us are pursuing that.
Right. In fact, just to share that, we've been piloting with our tokenized bond for the government. And one thing is, if you really want to scale that up, you need global standards, you need global platforms. What we're seeing now is almost like walled gardens that with platforms that's operated by different firms, and they're not interoperable. And if you really want the tokenized asset world to take off, I thought one comment that we received is that can we have some kind of industry standard so that everybody complies with that, so that all these platforms become interoperable and it becomes one big marketplace. I think that's one thing that probably we might need to think more about. But you have mentioned cross-border payment, and with blockchain technology, the use of CBDCs, and we are seeing actually a lot of promise in solving the long-standing pain of cross-border payment being too slow, too expensive. And Rajeshwar, I know that India has been trying out different cross-border payment linkages with, for example, Singapore, and you are contemplating one with UAE probably. What are the issues that you see in pursuing all these cross-border payments, especially in terms of the differences in capital controls, AML, et cetera? How do you resolve that? Is that a stumbling block that's really hard to overcome?
I think simplifying cross-border payments, as Ravi has also mentioned, in terms of costs, etc., I think there will be tremendous scope for using the CBDC. And it can actually simplify the intermediation and increase efficiencies, reduce the costs. Interoperability should be a core feature of this entire process. And, but practical implementation will require some amount of compromises between the countries concerned. And CBDC also provides us opportunity to start off in a clean slate, in the sense we can do away with the existing edifice, perhaps go ahead with a new structure which will be reflecting, which will harness the potential of CBDC in the cross-border payment space. And actually, we have started this process on a bilateral basis. In fact, with Singapore, we have the link with FastPay. You have QR code-based link usages in bordering neighboring countries like Bhutan, Nepal. We are also extending it to UAE. So at present, we have actually used more of a bilateral mechanism to process further. So it will be one-to-one country-wise, but maybe going forward in a multilateral basis, how do we do about it? I think that is something which requires a further amount of thought on this. Yeah.
Right. Well, in fact, on a multilateral basis, it's a lot more effective. I think that's what Project Nexus in Singapore, which concerns about linkages of different instant payment system, and Mbridge in Hong Kong, which concerns about creating a CBDC platform for multiple jurisdictions. These are two really promising projects that might actually eventually get us a multilateral linkage instead of just bilateral linkages. But the interoperability issues probably is something that we still have to resolve. Ravi?
Yeah, Eddie, you're absolutely right. I think, and I think we need to unpack the problem statements. So there's one problem statement is about cross-border payments. The other one is cross-border settlement. And the linkages that we spoke about, the one that we recently did between Singapore and India, is where we linked up the two instant payment systems. We did that with Thailand, and we've done that in Malaysia. It's not rocket science, but still takes about 1 year of hard work because there are protocols, and India has certain regulatory requirements on capital outflows that have to be taken into account in this. But once you set it up, it's very easy. It reduces transaction cost to about 2% of transaction value. Today, I think many people for retail payments across borders pay about 6 to 8 to 10%, which is a crime. Because these are poor people, migrant workers, small and medium enterprises making small payments, and they get to pay this. So what we've achieved in small bilateral linkages is already a huge thing. You don't need CBDCs, you don't need blockchain, you just link two instant payment systems, and it's very fast. I did this with Governor Shaktikanta Das live. and the two prime ministers were watching us. Quite stressful. But with 3 clicks, I managed to send Das 100 rupees, and he returned the money, of course, in Singapore dollars. So even the FX is taken care of instantaneously. The settlement problem is the bigger one that we are trying to solve. And so mBridge, what Hong Kong is doing, and Dunbar, is about also having the 2 banks settle. Yeah. So today, I can send Rajeshwar money directly into his bank account by just knowing his identifier. Or mobile, using my mobile, and it goes directly as rupees into his account. But my bank has not paid his bank yet. So his bank is out of pocket, is facing settlement risk. But if he had e-rupee and e-Singapore dollar, wholesale CBDCs, then the 2 banks can exchange that, and they're settled. That is the difficult part, because we've not been able to scale that. So if we can push what mBridge and Dunbar and the Swiss are doing, with these experiments that are being coordinated by the Bank for International Settlements, I think we have a long way to go. For instant payments, I should mention Nexus, because the BIS Innovation Hub is fronting that rather than it's like signing free trade agreements. Bilateral FTAs are painstaking, so you have multilateral trade agreements, which everyone jumps onto, plugs into. And so the BIS is leading this project, Nexus, which tries to achieve multilateral platform for linking instant payment systems. And we're happy the 5 ASEAN countries, Malaysia, Indonesia, Thailand, Philippines, and Singapore have signed up for it. We're committed to have this, not only for ourselves, but eventually with a view to linking up with the Eurosystem, with Brazil, with India, with China, and others. And I think this will be a much lower hanging fruit, which will already confer substantial benefits to people without even going into CBDCs and blockchains and the like.
Yeah, I think there are 2 tracks that are going. Project Nexus is about linking up instant payment system, very good for remittances, small amounts. But in the longer term, the other track, Dunbar, mBridge, will provide you with a complete solution in terms also of settlement. And I can say that this clicks, doing the clicks using the faster payment system to make payment to other places in front of a camera is stressful. We did it yesterday together with Setaput to mark the linkage between FPS and PromptPay. And we have to do the transaction. I was afraid that it didn't go through, so, so it was all right. Now, we have about 10 minutes, so let me open up for questions. And you can use the QR code to send in your question that I can read here, or you can just raise your hand. Yes, over there, Daryl.
Thank you, Eddie, and thank you to the panelists for the very insightful sharing. I'm actually coming from the Monetary Management Department of the HKMA, and I do have questions about the implications of adoption of digital central bank currency. In the sense that, if you think about, the currency issued by central banks, right now in our real world, the notes and currency, and also the reserves held by commercial bank at the central bank are actually 2 segregated, separate pools of money, and they don't really talk to each other. So if you imagine a situation where we have loads of demand for cash and coins, and then the central bank just issue them, it won't really, contaminate or affect your monetary operations and the monetary conditions. But if we actually tokenize the cash and coins and central bank currency, and it makes it potentially much more fungible, with the reserves money held by commercial bank with the central bank, would that really complicate, our monetary operations and the central bank's influence over the general monetary condition? That's my first question. And the second related question is that, would you recommend separate the 2 pools? That, if we're going to issue digital central bank currency, we should actually keep it separated, from the reserve held by commercial banks with the central bank. That's my questions. Thank you very much.
Who would like to go first? Maybe Eric? You would like to try that? No? Ravi?
I think underlying that question is a deeper question of how much CBDC should a central bank issue. Today, notes and coins are issued just to meet demand. And because the demand is fairly low, the issuance of notes and coins, printing money in the old sense, doesn't create an inflationary and monetary problem because the bulk of your money supply is not in that form. Will CBDCs change that? Well, the answer to that is how much CBDCs will you issue? My personal view is that central banks should set a limit on how much CBDCs they issue. Because if a CBDC is akin to notes and coins and central bank reserves, then that is a small part of money supply, the monetary base, which is about typically 5 to 10%. And you don't want to issue more than that because then you're expanding the monetary base. And I also don't think you will have phenomenal demand for CBDCs. Both Eric and Rajeshwar said that. People like to have the optionality of holding a central bank liability in digital form, but why would you hold large amounts of that? It's non-interest bearing. So even in India, the take-up in the wallets is not phenomenal because there's an amount of money you'll keep for notes and coins and so for CBDC. So I think the demand will not be overwhelming, and as long as the central banks are prudent in the supply, I don't think it should complicate monetary operations as such.
I guess you could say that there might be a lot of demand in a crisis situation. That's the bank run equivalent. So therefore, we have been thinking of, and that's true also for other projects, I think, to have limits, as you say, Ravi. Otherwise, you might have unlimited bank runs, and of course, that could have large effects on stability.
And also now, I think there is a broader consensus that CBDCs should not be remunerated. If you remunerate CBDC, that will attract actually funds to go into it. Any other questions from the floor? Yes? Bob?
Ravi, Menon emphasized the need for stable coins to be backed and regulated and sort of proper money. But the empirically largest stable coin to date was described in a cover story by Business Week in November 2021 in essentially hilarious terms and repeated in the book Number Go Up by the same author. So how do we account for the fact that the market, such as it is, has been so tolerant of, shall we say, such slipshod money?
Maybe Ravi?
It beats me too. I'm amazed at how, at the interest and demand that people still have for these highly volatile cryptocurrencies and so-called stable coins. It's despite the best efforts of regulators around the world, and now more and more of us are putting in place restrictions. And so in Singapore, we've placed a variety of restrictions on retail access to cryptocurrencies and so-called stable coins. The only distinction we make is with MAS-regulated stable coins, where we have assurance that that's fully backed and it's ring-fenced and it's on-prem, it's not going anywhere. Then it's old-fashioned narrow banking. I think that works. I think when the controls around the backing for a stable coin are weak, then a lot of people are going to get deceived into thinking that they are going to hold value. And today we see many examples of that. Even those that are fully backed, I've noticed they have small volatilities, which reflects actually some degree of skepticism in the markets that the stable coin value will hold. So I would be quite cautious, but we do think that if well-regulated, they have a great purpose. And so we are gingerly embarking on that by putting in place a regulatory framework, licensing a few selected ones, and seeing what kind of applications they make on the innovation front.
And I should add that this regulation has to be done on a global basis because stablecoins can go everywhere. It's cross borders. So I'm really glad that the Financial Stability Board has come up with basic principles on designing the stablecoin framework so that in Singapore, in Hong Kong, in Sweden, in other places, our stablecoin legislative framework will be very similar, fully back, segregate client account, etc. And I think that's essential in order that we can have this additional layer of means of payment, which is well-regulated stablecoin. So in future, the way that I look at it is very similar to Ravi. In the CBDC will be the foundation layer where it will support the next layer, which is private bank money, comprising tokenized deposits and stablecoins, which will support the transactions of tokenized assets. I think that's probably the way that our future monetary system will go. All right. Any other comments anyone has? If not, I think we are right on the dot. I won't conclude or draw any summary, but I will invite you to join me in a big round of applause for our speakers.
Thank you very much, Eddie, and to all our speakers. Can I invite you all to come to the front of the stage for a group photo, please? We're actually going to have 2 rounds of photos, one with our official photographer, and then one for the media, because you're a photogenic group of central bankers. Everybody say swish. All right, stay there for our media friends, our media photographers who are at the back. Thank you very much again. Another round of applause for our panel, please.